Hey, it's Clay, and this will be a video chart on ticker symbol MXC. We will take a look at the 30-minute time frame. Real quick, what do I mean by 30-minute in case maybe you're new to charts? Instead of each one of these candlesticks here representing 1 day's worth of price action, which is what you would normally see, each one represents 30 minutes. So while this here may look like several days worth of time, it's actually today's price action broken down into 30-minute time slices. I like to this time frame that does a good job of telling the quote-unquote story of the price, and then just makes mapping out a pretty logical question and a kind of a logical summary, I think, pretty straightforward. So if you just say, Clay, look, summarize this price action for me quickly, I would say pump and dump. Now, maybe there's a little aspect of thin ice, and I'll explain what I mean by that. But real quick, what do I mean by pump and dump? I don't know anything about the company, so I'm making that statement based solely on how the price acted itself. So just strictly talking about the price action, and my definition of a pump and dump is that a price makes a really nice move, and then within a relatively short amount of time, the price goes back to where it started, if not even lower. So let's kind of quickly go over, where all this started and the definition here. But to me, it started when the price broke up above this previous resistance level right here at, we'll call it the $9 mark. So that's essentially where it started. Again, just technical jargon, that's where the breakout occurred. So let's go through the definition. Price makes a really nice move. Well, it started right there on the breakout, and it went all the way up there. I'm thinking we can all agree, yeah, that was a really nice move from 9 up to basically 14. Second part of the definition, within a relatively short amount of time. Considering this all happened in the same day, in a single day, once again, I'm hoping we can agree that, yeah, this happened in a short amount of time. The price goes back to where it started, or in some cases lower. Now, this is where the thin ice point also comes into play, because to be fair, let's say the price does, kind of go sideways like it's doing right now at $9 and then starts to work its way back upwards. Well, in this situation, you would have, again, this definitely assumes you have more of a big picture type viewpoint, but you would technically have a set of lows there. You'd have the bottom of that consolidation right there. You'd have these lows right down there. You picture each of these as stair steps. And then, yeah, from the big picture, the price would still technically be going in the upwards direction. On the flip side of things, though, if the price comes down to right around this $9 level, breaks to the downside, and then continues to separate, well, at that point in time, you would literally have the price right back to where it all started in that range. And not to insult your intelligence, but price movements with true power are not going to be going back to where they were. And anything down below $9, especially down below $8, is back to where the price all began. So I guess probably the more accurate term would be pump and dump on thin ice, that thin ice point being $9. So yeah, going forward, let's see if the price can stay up above that area or if the price is going to continue to separate to the downside. One of the biggest questions that I get is, hey Clay, how do you find the stocks that you trade? So what I've done is put together a free resource guide where I talk about the tools that I use to locate stocks that I find interesting and think may have potential. So if that sounds like something that could add value to you as a trader, then click on the image that is up on the screen right now and I will email you the guide. The guide itself is very short and to the point, and best part, it's completely free. Thanks for watching the video. Let me know if you have any questions.